when we think of budget, we also think of the taxation and the impact of tax rate changes, whatever that are proposed in the budget. Because taxation is one aspect that impacts, in terms of personal taxation, the individuals a lot. That's where let's see what are all the tax implications of budget 2023-24 for individuals. Budget 2023-24 has made changes in the new tax regime versus old tax regime, and in that context it's pertinent to note what has changed in the new tax regime vis-a-vis what was prevailing in the old tax regime. While presenting the budget, the finance minister has announced no tax for those with annual income up to 7 lakhs rupees under the new tax regime, but made no changes for those who continue to be there in the old regime that provides for tax exemptions and deductions on investments and expenses such as HRA, that is house rent allowance. Now, let's go point by point. To start with, new versus old tax regimes. The basic exemption limit has been raised to rupees 3 lakh from rupees 2.5 lakh. A 2.5 lakh basic exemption limit is prescribed in old tax regime. The move will lead to a saving of rupees 33,800 for those earning up to 7 lakh annually and opting for the new tax regime. Again, we all will be inquisitive to know what kind of benefit and what kind of savings that the individuals will have through this new tax regime. Those with income up to 10 lakh rupees would save 23,400 rupees, and 49,900 savings would accrue to those earning up to 15 lakhs rupees. This is what the benefit that may accrue for those whoever opts for the new tax regime. Most importantly, the surcharge reduced for high salary people in the new tax regime. For high salary people, the surcharge has been reduced from 37% to 25% for high net worth individuals with income above 2 crore rupees. This would translate into a saving of around 20 lakh for those having a salary of about 5.5 crore rupees. Currently, individuals with total income up to 5 lakh rupees do not pay any tax due to rebate, but it is proposed to increase the rebate for the resident individuals under the new tax regime so that they do not pay tax if their total income is up to 7 lakh rupees. Further, the number of slabs have been reduced to 5 in the new tax regime. Let's see what are all those new tax slabs in the new regime. Income up to 3 lakhs rupees, no tax under new tax regime. 3 to 6 lakhs rupees, tax at 5%. 6 to 9 lakhs rupees, 10%. 9 to 12 lakh rupees, 15%. 12 lakh to 15 lakh rupees, 20%. 15 lakh and above, 13%. So, under the new regime, the slabs have been reduced to 5, and the erstwhile 2020-21 budgets optional tax regime slabs have got transformed into a new regime tax slabs of 5. From April 1, these new slabs will come into effect. Further, to make the new tax regime attractive, even the finance minister has extended the benefit of standard deduction also, and each salaried person with an income of 15.5 lakh rupees or more will have a benefit of 52,500 rupees. Of course, under new regime, the individuals will not avail specific exemptions and deductions like HRA, that is house rent allowance, interest on home loans, investments made under Section 80C, 80D, and 80CCD. These deductions will not be available to the people whoever opt for new tax regime. However, these deductions continue to be there for those whoever continue to pay taxation under the old regime. So the option is given to the individuals whether they would like to continue with their old tax regime or whether they would like to go for new tax regime. If we critically analyze why these two kinds of methods under two regimes for taxpayers and what kind of impact it can create, why these two regimes have been introduced, kind of questions tend to arise to each one of us. Overall and in general, what we can find from these two regimes is in the new regime, there is no force on you to make any savings to reduce your tax to avail the deductions. Whereas under the old regime, for you to have tax benefits, you need to invest under various sections which are allowed for claiming tax deduction. So, in a way, the forced savings culture of old regime is done away with the new regime in place because new regime doesn't bother about what kind of savings you are making and whether you need to claim any deduction or not, because such kind of deductions, such kind of exemptions what they used to be under the old regime will no longer be prevalent in new regime. In new regime, it's a state formula. You have five slabs. As per those five slabs, you need to pay your income taxes. What you save, what you don't save, it's no botheration to the income tax department. So the crux is maybe a neoliberal system of allowing individuals to spend their money is what the aim of the new tax regime, whereas the old tax regime used to insist for compulsory savings to claim any kind of deductions. So goodbye to those compulsory savings regime in case if you tend to go for the new regime. Hope the information is useful. Thank you very much.